Hello traders, Alla on August 15th at 10:02 EST. Oil news in 18 minutes. We respect oil news only due to volatility. This is institutional level. We're very excited on oil this morning. 64 institutional support present in front of you for years. As a day trader, if you want to trade with institutions and not against them, you always pay attention to institutional levels. 64 area is a flawless place for day trader to be. Sell-off on oil now overextended. Sell-off on oil coming from institutional reversal zone. So, let's walk down memory lane on oil and all the way to 1-minute chart right at the time of oil news release. As Fibonacci levels remain the same, Fibonacci strategies remain the same. The only thing changes: risk management, trader psychology, and hold time. So here we go. This is oil monthly in 2016. Do you remember oil at 29? What do you see on this chart? You see very clearly reversal zone, which means this is not the place to short. This is a place to monitor for reversal. If you don't want to worry about holding position for months and years, you're paying attention to weekly chart that giving you more close-up look. This is trend inception on weekly. Anyone surprised where buyers stepped in from? Shock or not? Flawless trend inception, flawless bullish rally. This is what played out on oil next. Oil struggled at key Fibonacci resistance. This was a problem. Absolutely no surprise whatsoever, none. 3 months war zone at this level. Here is oil now. This is the reason why oil's selling off. This is your investment decisions. Key support on oil 64. I don't care how bullish the news is. All I care about this support. I don't care how bearish the news is. All I care about this support. Fibonacci levels will override any news. Fibonacci levels always identify what price will do in advance. Here's number of reminders from previous news events. This was bullish news on oil in the month of January. Trend inception 64 level. Oil sold off as expected. Twice during extremely bearish news events in the market. This was extremely bullish news on oil. Did not mean a thing. Oil collapsed 350 points, as expected, because Fibonacci Reversal Zone identified that price will reverse. This is day trading chart on oil now. This level's been present in the room since July. This is where oil rallied from first week in August. Extremely bearish news. 5 times oversupply on oil. And as expected, oil reached Fibonacci reversal and oil collapsed. This is where oil been dancing this entire week in worthless bullish corrections. What caused the problem on oil? This key Fibonacci resistance did not let price through. This morning we're expecting price at drastically lower level. This is not the place to short. Shorting for day trader, not the recipe for success, especially when you understand when it comes to institutional levels, it is always area. Never trade against institutions, trade with institutions. Sell-off started here, not now. So, oil collapsing to here, this is institutional support. Monitor for long. Time and time again, reversal zone, not the place for day trader to ever short. If I convert this chart right now to 1 minute chart, what would you see? Fibonacci levels present in the room for months showing you on 1 minute chart the accuracy of the method. We don't care how bearish the news is. All we care about is Fibonacci levels. Market is flawless Fibonacci puzzle. Market preset by Fibonacci levels. This would be even better. Rules are met. Take a trade. Do not touch oil first 5 minutes after oil news release. Allow oil to settle down and remember, ultimate trend inception levels with institutions is a beautiful place for day trader to be. Again, on day trading chart, identified months in advance. On institutional chart, identified years in advance. What you choose to trade, absolutely up to you. Identical formula across the board on all the instruments. Identical reminder on what playing out on Nasdaq. Nasdaq selling off because Nasdaq at reversal zone. What is key support on Nasdaq? This level. Do not ever short near. As a day trader, you understand how crucial this level is. Identical chart on Apple. Not the place to buy. This is the place to buy. Trend inception 2017. Again, if you missed my videos and events prior to Apple news release, pretty please review what I said at point of entry before the earnings. Apple exhausted, not the place to buy into reversal zone. Apple doing nothing, simply sitting pretty. Bullish rally overextended. Google struggling for dear life at Fibonacci Reversal Zone. Google been here for the last months. And if you watched all of my prior videos and all of my previous comments and discussions, you understand extremely well that what's playing out in the markets right now on institutional indexes is 80% identical to '08. Only one piece of a puzzle is missing. Be a knowledgeable trader. Be a knowledgeable investor. Recognize. If trading on the news worked, if trading using indicators worked, every single person on the planet would be Bill Gates. The only thing that works is price action and Fibonacci. Institutional reversal zone in a play across the board on all the instruments. And that's what you will be seeing this morning on oil and S&P at day trading trend inception. So, if oil collapses to institutional support, 64 will be even better place to be. And here comes S&P. Anyone surprised? Here comes the buyers. Boom. Shock or not. As we discussed with students, this is institutional support. Rules are met, take a trade. What is key resistance to the upside? This level. And again, and again, and again. Sell-off on S&P started at drastically higher place. In case you missed all the events of last week, pretty please review. This was flawless place for day trader to short. This. Not now. Worst idea ever. Trend reversal on day trading charts. The only thing that's blocking this structure is this resistance. Bullish correction only. So just to give you a heads up about oil, minus 2.5 ME is expectations on oil. More negative the number, more bullish the news. More positive the number, more negative the news. Oil oversupply is bearish, undersupply is bullish. So here we go, extremely bearish news on oil. As you know, before oil news release, we identified this level. This is key institutional support that we are monitoring. I will continue bringing up this chart for the remainder of the morning, so you can see what plays out in the market next. And you can see what's playing out now on S&P. Take a look. This is 1-minute chart. This is what price had done for the last 40 minutes. Price been dancing in massive correction as expected. As this Fibonacci resistance reminding you, only if you separate corrections from reversal you will succeed. Only if you don't trade narrow corrective choppy markets you will succeed. Market simply taking a pause. Buyers are weak. This is daily reminder of all I identified well before the news. Are we gonna see phenomenal bullish rally because key day trading support in a play? Identified months in advance? Because key institutional support in a play identified years in advance? Bearish news? Shock or not, oil rallying. My goodness, how predictable is market? This was expected. And again, in case you missed prior discussions, this reversal zone been present in the room for months. Since early July. Short at reversal zone at resistance. Short from Fibonacci resistance, not into institutional support. Every day, every time, the same formula. It remains only correction on oil. No reason to pull a trigger yet. None are present. Most important rule you learn in the course, in a play that show you knowledge is power. Good things in life worth waiting for. As S&P doing exact same thing on 1-minute chart, as expected. So here we go, ladies and gentlemen. We've been sitting at key trend inception on both oil and S&P for over an hour. My goodness! Are you surprised? Should not be. This was expected. This is the power of the method. Trend inception trades. Shorts were not an option. This Fibonacci reversal zone had been identified weeks in advance. No matter what chart you trade on S&P, this is trend inception levels. Here we go. Anyone surprised? Should not be. This was expected. This was the only bias this morning. And this is the power of the method. You're learning in the course that you can apply to any instrument you can choose to trade. And let's go back to oil. I'm so happy to see finally market moving in the right direction. Oil picking up this steam. Bearish news did not mean a thing. To remind you, this was a bearish news release. As expected, key support in a play identified months in advance. As expected, key trend inception in a play identified days in advance. What is the obstacle that remains? This level, this resistance. This is one knowledgeable trader right now respecting his key target and start scaling out from position. Key target is reached. Stop outside of break even. If you're trading multiple positions, you're scaling out accordingly. Taking 60% off now, leaving 40% on. Knowledge is power. This is how you trade. If price collapsing right now from this bright green level, don't be surprised. It will be very refreshing. It means you will have many more points of entry. Patience, knowledge, and discipline once again paid off. This is 10 years of work with price action and Fibonacci that I cannot tell you how much I love. I live and breathe what I do. My students become my dearest friends for life. Stories of success are endless. What you're seeing in front of you is ultimate accuracy. What you see in front of you, you can apply to any instrument, any time frame, any platform you can choose to trade. Knowledge is power. Crash and burn S&P. Market will become more interesting. Price will remind you, every single tick matters. Price will remind you that in the course you learn, this is your key target. No surprise. Taking profits off the table and moving your stop outside of break-even is the key. Knowledge is power. You can listen to Anna on the website. Anna managed to pull 4.5 points out of this market. How many points are you up? Look what Apple did when it came to decision point 2. It did this stunning dance. And this is S&P now. Reminding you never pull a trigger randomly. Know when to enter, know when to exit the position. Do not be a follower, be a leader. Be knowledgeable trader. If S&P crashing back down to key support again, market became better, not worse. Price reminding you, only Fibonacci will give you ultimate accuracy. Price also reminding you, this was key target on gold. Identical strategy. Do you remember gold at 1366? Let's hope S&P will do exact same thing as this key target is reached. No surprise. Every day, every time. A whole lot more than 40,000 hours of work with price action and Fibonacci. The reason I'm mentioning this number is it's very clearly outlined in the book Outliers that show you if you combine passion, knowledge and effort and 10,000 hours plus of work, you will absolutely be successful. And that's what you're seeing in front of you. Price collapsing as expected from Fibonacci target. So take a look at that. Price been pulling back from key Fibonacci target for 5 points from level identified days in advance on any chart you choose to trade. Doesn't matter if you trade 5, identical formula, not the place to buy. This is how you stay out of trouble. Only if you play by the rules, the sky's the limit. This been the market for the last hour and a half. No surprise. Knowledge is power. So here we are after 12 EST. Buyers continue picking up the steam and struggling to break through this Fibonacci resistance. This is a chart this week in our day trading room, as again, you can convert this chart to any time frame you trade, from 1, 2, 3, 4, 5 to any chart to tick chart. This chart can remain intact 1 more hour, or 5 more hours, or 5 more days. Rules apply when levels must be changed, and that's the core of the course. So if you come to the website and review the information under Learn, I look forward to working with you. New class starts again on August 20th. All classes are live. Group course 8 weeks, private mentoring 16 includes all group classes. If you decide to remain in the course after graduation of the course, you can continue taking all classes with guided live trading, with access to all the classes for minimal $157 per month. Never hesitate to contact me, and please listen to students on the website. Look forward to seeing you in the course.